You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to watching the Financial Survival Network. Well, in these days of declining markets, of potentially really volatile prices and elusive capital gains, you need to really be thinking about cash flow. Probably it's a good thing to always be thinking about cash flow, especially if you're looking to retire in the not too distant future. And we're really fortunate. We have the host of the Retirement Hour. His name is Mark Falter. And Mark, you run a Mid-American Wealth Advisory Group, 30 years experience in this industry. So cash flow, that means dividends. But, a lot of people chase dividends at the expense of safety. How do you guide people to pick the right cash flowing opportunities?
Well, that's exactly right. Sometimes they will pick dividends in light of safety, but we're trying to look for both. What we do, we actually do all of our own management in-house. We watch the credit ratings of the holdings that we buy very closely. And I like to buy individual holdings that pay very good dividends, not just stocks, but we also look at areas such as preferred, such as corporate bonds. Bonds are coming back. But when you do that, you've got to have the ability to actually do the analysis on them and watch them and babysit them and make sure the credit rating doesn't drop.
Okay. Do you look for these so-called aristocrats in the dividend or the lesser nobility?
Well, when we actually go for where we really want to go into the safe area, we're looking into the area of bonds. And lowest we'll go typically is triple B. And you can find some good buys in there. But I'll tell you what, in the area of even the A's and the A pluses, there's some good opportunities right now.
Okay. So what's a good opportunity? How do you define that?
Good dividend, good credit strength, consistent dividend. And one of the things that COVID taught us is to look for cash flow. You want to, do I think there's going to be another pandemic coming, another shutdown? No. But I like to know that these companies can run without sales for a while. And COVID proved that to us the hard way. We were checking very deeply. And I will say most of the companies that we're buying that are post-COVID, they've already had the big test.
Mm-hmm. All right. So they managed to withstand the COVID challenge, if you will. And so when we look, what kind of rates are we looking at? Are we looking at 5% stocks, 10?
Right now, actually, it's tough to get into the 5s and the 6s in the area of common stock. There's really 3 or 4 areas we focus on in the area of dividends. Common stocks, yes, 3.5. I'll tell you, we've got some areas that pay a little higher than that, but for the most part, that's normal. Well, I'll tell you what, you can get into bonds right now, right? The Fed's taking interest rates up, so we're staying a little shy away from that, but I think they're coming back, but you could still get in the 4s and 5s there. One very good one, we have a REIT that's paying 8%, publicly traded REIT, doing very well.
Is that a property REIT or a mortgage REIT?
It is actually technically Altria is the name of the company, and it's paying like right now about an 8% dividend. Yeah.
Altria, huh? Interesting. And of course, we don't recommend anything on this channel because I'm not a licensed financial planner, but you are. So in any event, so rates going higher, rates going to normalize. What is your take on where we're heading here?
Well, we had a PPI, producer price index, that basically it went up, but it went up less than it did in July. It went up 9.8%. July, it was up 11.3%. That combined with
better. I feel so much better.
Well, it's turning. It's cresting, so to speak. We think. Now, this data that we're talking about, we've seen such high interest rates that we're reaching out and grabbing anything we can grab. But this is still short term. It's like I was talking to somebody about the CPI index. that showed like we were going in the right direction, but this is still only about a month old data. What I think is that the Fed is seeing their rising of interest rates work, and they will start lightening it up. I don't think we're going to be not seeing interest rate raises. I think we will. I just don't think they're going to be the 0.75 that we've been seeing.
All right. Well, you're old enough like me to remember inflationary periods from the 60s, 70s, early.
Yeah.
These things tend to carry on for a while. They're cycles, cyclical
they do.
nature.
Yeah, I was actually putting a radio show together for the Income Hour, and I actually didn't realize how high inflation had gotten during Jimmy Carter's time frame. It was 14.8. So as bad as this seems, we were at 9. Now we're a little under 9 right now. We have been higher.
All right, but how much credence, really, Mark, do you put into these CPI numbers? They didn't have hedonic adjustments back then. The inflation rate was measured much differently. Can you believe what they're telling you?
Well, let me put it to you this way. The people are basically buying less, and that's what's making these numbers do this. Well, 80, and this is the first thing I thought of. Okay, so prices are going down. What's causing prices to go down? Well, fuel prices went down. 80% of the decrease is due to fuel prices. So why is that? AAA actually did a study on it and found that people are driving less. They're changing their driving habits. So
they're driving a lot in the Ukraine now. And hey, look, people cut back on their driving. We got EVs happening, all this, but and that's 40% of petroleum consumption in the U.S. is transportation fuels. But still, everything is energy. We know that. Nat gas just hit a high, almost hit $10 today as we're speaking on August 22nd, hit $9.98, pulled back a little bit. But obviously, nat gas, in a lot of respects, is more important than oil. And it shows no signs of backing off. It's up like 300+% in this latest round of inflation. What do you think when you're going for your electric? A large portion, 28%, I believe, of the electric in the U.S. generated by nat gas and the heating and all that. And, it shows no signs of backing off.
No, it's getting expensive. We're seeing it everywhere. I mean, natural gas is going up. Propane is going up. I recently had to have part of my driveway paved. I did a section 1/4 the size and paid the same price. The pavements per square foot, the guy told me went from $441 a square foot 3 years ago to $770, something like that. Almost doubled. It's just insane because it's a petroleum-based product,
Petroleum-based product, primarily derived from heavy crude oil, and we cut off Venezuela, so that jacked up the prices. We get some heavy up from Canada. What about energy? Energy stocks are giving some pretty nice dividends, aren't they?
Don't just survive, thrive. The Financial Survival Network.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near 2 producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. Osino has a tight share structure, and with its current treasury, it can self-fund the advancement of its gold discovery into at least 2022. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to osinoresources.com. That's osinoresources.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Nice dividends because they're able to charge more. Yeah. So nice dividends. We're invested a little there, but we're being very, very cautious because they can turn on a dime. And we saw that through 2020. Energy got hammered, oil particularly, so got to be very careful there.
Well, you see like an Exxon paying 3.5% and a Let's see, who else do we have that's out there? Chevron. What's Chevron paying? Chevron's paying even more than Exxon. Chevron's paying 5.68% forward.
Yeah.
That kind of stuff. How much risk is there really in the oil patch? They don't usually cut their dividends.
They don't usually cut their dividends. And the main thing you got to look for is if they don't cut their dividends, and it's hard for people to stomach this. If we see a price drop, you're taking the money out of the dividends. And I've always been a proponent of, as I say, eating the eggs, not the chicken. In other words, take the dividends, don't take the principal. It's when you have to sell Apple stock because it's down, but create income. Apple's a great company, but you don't want to be selling the stock when it's down. You want to be taking the dividends, and that's why we take very hard dividend plays.
Yeah. So, but maybe as a shorter term play, rates come down. It could be a good thing. I mean, these energy ones are really, they're all above 3%. So, and like we say, here, top 10 energy dividend stocks. Who would have thought a year ago? So you got to remain flexible.
Right.
I guess you also take into account your client's time frame when they're going to need the cash, how much risk they can accept. How do you come up with a tolerable risk profile for a client?
What I find, you've got to ask a lot of questions. But one of the things that I have found, and I think this is a weakness in our industry, and that is really judging the client's temperament. Takes you a few years of experience, but I take their account values and I, say to them, instead of saying, hey, if $1 million drops 20%, how does that make you feel? I say it is $1 million. If it turns into 800,000, how does that make you feel? For some reason, how's the old saying go? Life is measured in dollars. Your investments are measured in percentages, and people can relate to dollars.
Well, like a minor loss, I find, is a loss that somebody else encounters. A major loss is if mine goes down 3%, I'm freaked, right?
That's right. They say that's the difference between a recession and a depression. A recession is somebody else losing money. Depression is when you lose money.
Yeah, exactly. And your job and whatever else. Hey, but in all seriousness, losses, one guy I know, Rick Rule, says the first rule of investing, I think he took it from Warren Buffett, is don't lose money. And if you can't remember the first rule, the second is see the first, right?
Right. And now, to really spell that out for the people that are listening or watching, is what then? Is it going to be possible to buy something that doesn't go down in value? If you're investing in variable type products, it's impossible. The key is don't get yourself in a position where you got to sell it when it's down. That's the key. Don't get yourself backed into a corner.
Yeah. Yeah. Well, a number of years ago, all these energy stocks were yielding double digits, especially the midstream, the pipelines, all that. Well, I guess so. Looking ahead, where do you see the best opportunities and the biggest risks?
I see the biggest risks. Honestly, I see real estate actually decreasing in value. These interest rates cannot stay at this level and real estate stay at these prices, which is actually, if you dig into why does the Fed raise rates, this is why. They want people to quit buying so much stuff. Most people, when they buy things, have to borrow money. That's just the way it is. So they know if they take interest rates up, people will quit buying less. People quit buying less, then the prices start dropping. So they really want to see prices drop. I think real estate, we're going to see that. I think we should be getting some better buys in real estate next year. Areas that I think are some other risk, I still think we're going to see a little decrease in the market next year. So again, it depends on which side of the fence you're on. If you're taking income out, you shouldn't be having a problem there. But if you're taking income out of growth items, you kind of want to watch your P's and Q's.
Okay, I can buy that. And I think this is a time for extreme caution. Because if the economy really is in a recession, which I tend to think that it is, then the so-called growth stocks that we've all known and loved, the FANGs, if you will, probably in for a rough patch.
Right.
And at least profits really kind of drying up, going down substantially. We've seen all these FANGs really get hit, Mark, over the past several months since the market started its gyrations. So the question is then, if not the FANGs, where do you look? So you look for those dividend aristocrats.
Yeah, look for some of the dividend aristocrats, right?
What do you think is the best dividend aristocrat out there right now, just in your own personal opinion, not necessarily recommending?
Walmart, it's a good buy. I don't know that you'd necessarily consider it in the aristocrat area. Some of the other good plays, Coca-Cola, pays a good dividend. There's several of them that we're looking at. Yeah.
All right. That's good to know. So you're looking, they're really kind of those Warren Buffett type stocks too.
Right. And AT&T, it's another really good one, on the dividend.
AT&T. So people aren't giving up their cell phones. They're not cutting back the data plans, right? Just because there's a recession. And how are you going to know if you're going to get a job offer if you don't have your smartphone glued to your brain, right?
Have you ever tried to go with that? My wife dropped her cell phone in the washing machine yesterday. She's borrowing my cell phone now. It's like, I'm telling you, we've become addicted to these things. You can't go without them.
That's true love on your part, for sure. Hey, let me tell you a story. I was in Europe, in Croatia, and waiting for a boat, a little sailboat. And, I got distracted and go onto the boat, and I reach in my pocket. My phone's not there. Oh, my God. I run back to where I was, and there was a little note with some rocks on it. Said, if you left something here, come to the restaurant, and then had a big heart on it. And I go back. They had my phone because I didn't know what I was going to do there, Mark. I mean, it was like I'd have to buy a phone. I don't know where to buy one in Croatia. And I would have to, upload all my data. It probably wasn't as big a deal as I thought, but I was freaking out. Thank God there's like honest people in the world, right?
I'm telling you, it's not to get off the reservation here, but I read a study that said 141 people died last year reading their cell phones, either walking out into traffic, driving, falling off a cliff. We're addicted to it. Yeah, it's true. 141 people.
That's the person I ran over? Oh, yeah. Geez, I had no idea.
Yeah, we're addicted.
Yeah, we're in another world here. Hey, so Mark, I know people are going to want to connect with you on the web. They're going to want to visit your site, read your work. Where do you go to find all that out?
The best place to go, short, sweet, to the point, is incomehour.com, www.incomehour.com. You can listen to some of my previous shows, and we change it every week. Talks a lot about me. That's the best place to go.
That's cool. Hey, you guys out there, go over there. I want you to send me an email. If you got a question for Mark, you can shoot me an email to kl@kerrylutz.com. I want to know how you're coping here. Lower market, elusive capital gains. Are you going for income? If you are, how are you pursuing it? And how much risk are you taking? And how are you doing at it? kl@kerrylutz.com. Mark, been a pleasure. Appreciate you stopping by. We'll talk to you again.
Hey, thanks, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.